Welcome back to Fast Money. A new report finds Apple is pausing hiring for roles outside research and development. The report comes as the iPhone maker's stock loses more value. The stock is now down almost 11% just this week. The chart master thinks it's primed for a breakdown. Carter, what are you looking at?
Well, it's a big old mess, but let's look at this. Is kind of fun here. Watch, it looks busy, but we can walk through it quickly. So if you look at the past 20 years, Apple has outperformed the market in 15 and underperformed in 5. But forget that. It's all about your CAGR, your compounded annual growth rate. S&P 7.6, Apple 37.4. So what that means is 100 grand in the S&P, you got 432 grand. 100 grand in Apple, you got 57 million. Now, is that meaningful? No. But what is meaningful is Apple's relative performance, which has been oh so good, is really starting to break down. Let's look at some charts. So the first chart is basically a ratio chart. It's just Apple divided by the S&P. So it's not about the y-axis. It's about the direction of the line. If the blue line is rising, Apple is outperforming the S&P. If it's declining, it's underperforming. And what we know is that we have come down to this trend line to the penny, and today we just broke below it. Now let's look at a longer-term chart, and it's the same circumstance. Same circumstance. Let's look. This is 02. Remember, it looks like the same, but now that was only 5. This is 20 years of outperformance, and the whole thing looks like it's going to basically give way here. All things that are great come to an end, and it doesn't have to be the end of Apple. But just remember, Cisco is worth more than anyone in the world. Where is Cisco? So was AT&T. So was U.S. Steel. So was General Motors. So was Exxon. You can be on top a long time, but you can't stay on top.
What is the next level when we see this break, that you're watching? Right.
So, again, not shown here. This is a relative chart, but Apple's done 4.5% today. I think it's got another at least 15 to 20% to go.
15 or 20%. Okay. Guy Adami, what do you think? Down 15 or 20%?
I'll get you to 125. I can get in that ballpark. Obviously, 20% is lower than that, but we talked about it in earnings quickly. The stock traded down to this level post-earnings. It rallied when Amazon had a miserable quarter. It was a flight to quality. This stock traded 158 2.5, 3 days ago. I'm with Carter on this one. It's still an expensive stock in this environment.
Yeah.
If you think the market's going lower, the market doesn't bottom until Apple bottoms. Market doesn't hit a bottom when you sell your Zoom. It's when everyone on this trading desk or all the holders, and I don't mean all, but the incremental holder sells their Apple. Apple is supposed to be a quasi-safe bet in the marketplace. When people sell their Apple, that's when you could say the market is bottom.
Why is Apple trading at an 80% tile of its last 1 year valuation average? It shouldn't be trading near the top of that. If you look at Apple in February of 2020, it was an $80 stock that had just rallied 60% from its lows of 2019. In other words, this stock had major momentum going into COVID, and since COVID, it's traded from 80 up to where it is. The valuation's too high, and it's too big of a weight in the markets. That's another conversation for another day, but this is what we're seeing going on with mega cap tech, and it just shouldn't be this big of a structural weighting, not only in our market, but in the global economy.
Well, this is one component, Carter, of your call of S&P 500 to 3,100 or so, right? What are some of the other generals that we need to see go substantially lower from here?
A lot of them, it's underway. We know Microsoft is breaking down Google. But what we've had that's kept the market from really taking its down leg is we've got this money flow into things like McDonald's, into Caterpillar. But those things are already exploited. So here and now, you have a circumstance where money has come out of the big, heavy tech names. It's gone into some other sort of safety, quasi-safety names. But the net of it is now that it's gone into those are already extended, and the apples are dead. So there's nothing left to play.